Fraternal organizations have long served a niche role in the U.S. life insurance industry. In 2023, higher interest rates helped lift annuity premium for these organizations by a double-digit rate at 16%. But it fell short of the overall life and annuity sector's growth rate of 22%. We're joined today by two life annuity analysts, Director Ed Kohlberg and Senior Financial Analyst Stratos Laskarides, who contributed to a recent AM Best report on the segment. Gentlemen, welcome. Great to see you both. Thanks so much for joining us.
Thank you.
Sure.
Ed, let's start with you. Favorable premium growth in 2023 continued through first quarter 2024 for this segment, but it trailed the overall life and annuity sector. Can you break down that growth and explain what drove that?
Sure. Yeah. It's mainly driven by annuity sales growth and annuity premium, which has taken off for the industry holistically as a whole. As you mentioned, the 21% growth for the whole industry. The fraternal industry grew as well. Record sales on the annuity side, where their premium was 16% growth, and it's of course driven by interest rates and where they have gone more recently. It's been a favorable product for the insurance companies to sell, and it's a good product for the policyholders with rates where they are. And some of the growth has also been driven by new distribution tactics that some fraternal companies have taken, reaching out to different distribution channels such as IMOs has helped some of the smaller and mid-sized companies that have not gone into that market before. Now that's helped with their annuity sales. On the life side, sales did pick up after the pandemic, but that's since tailed off and kind of moderated a bit, and there wasn't much growth there year over year. So majority of the growth is annuity sales, and it's coming from some key players within the industry. We have large players such as Thrivent that continue to grow on the annuity side, but some newer players that have entered the market and focused on annuity for growth within the fraternal industry has really helped to support the growth on the annuity side for the whole fraternal industry as a whole.
Stratos, how well capitalized are these fraternal organizations?
Generally well capitalized to support their growth strategies. Some obviously have run into capitalization issues due to high expenses or high new business strain because of growth, as Ed was referring to, or some have had high claims experience relative to their pricing assumptions. But for the most part, the companies have fared really well. They have been around a long time, and they've built up high levels of available capital. And this is really important because as fraternals, they generally have less access to additional equity through the capital markets if they need it. And because of this, also AM Best views it as favorable ERM when the companies are targeting high solvency ratios and maintaining those, for example, as measured by best capital adequacy ratio or RBC ratios under the NAIC's measurement. And for other companies that have less excess capitalization above required capital and liabilities, also it's favorable ERM when the companies are closely monitoring the ratio of their available capital to their liabilities. In addition, it's favorable when companies are keeping a close eye on growth in general and new business strain, as we were referring to earlier. And we've seen companies also monitoring their policyholder dividend rates and crediting rates very closely for the life business they've sold and the annuity policies they've written. And in addition, fraternal expenses is a key feature of the market. These associated with the fraternal activities that they carry out for the members they serve. And because fraternals are tax exempt, generally their fraternal expenses are higher than taxable organizations, and that's because of the fraternal activities they're carrying out for their members.
Ed, what are some of the challenges facing this more traditional segment?
Yeah, some of the key challenges deals with technology, innovation, updating systems. When we look at some of the smaller to mid-sized fraternal companies, to keep up with the technologies that's been growing and changing throughout the insurance industry, it's a challenge for them when it comes to the expenses. Some of these upgrades to their systems and to their tech spend can be expensive, and they don't have the scale to absorb that kind of spend. So for them, it's important to get it right the first time. They don't want to take a bet on a new technology that might be the shiny new object, but might not work for them. So it's okay to be the fast follower in that space. It's okay to see what's working for the industry before you put their expenses towards it and see what works for them. Scale is important as well when it comes to putting out that money and spending it on technology. So that's one of the key challenges that they've been facing. Another key challenge has been talent management. It's been very competitive for experienced talent within the insurance industry, and attracting that talent towards the fraternal world has been a challenge for some companies, but many have been very successful in doing so. It has helped that some of them have updated their fraternal charters to help facilitate this as well. Another continued challenge, this isn't necessarily a new one, but just membership growth has been a challenge for the fraternal industry for the past decade or so. But I think the fraternal model presents a great opportunity for the policyholder to buy an insurance policyholder and do good as well in supporting a fraternal organization and supporting a community.
And Stratos, how have insurers in this segment responded to those challenges?
Yeah, building on what Ed said, we're seeing some companies team up with other companies in joint ventures to really share resources, and it's around administration systems, product launches, or maybe even investments. And adding to that, the American Fraternal Alliance on their website, they also highlight how they carry out and support talent management specifically. So for example, they're implementing a fraternal career development series which involves leadership training for up and coming fraternal executives. And this is really important, and it's a platform for collaboration and for sharing ideas around products, technology, administration, distribution, and that's really, really important for fraternals to maintain the support they provide to their members. But as Ed mentioned, it's really important to implement the technology initiatives really carefully. Given the size of the investments and associated expenses, they can't afford to get it wrong. And as Ed mentioned, it's okay to be a fast follower. We've seen enhancements they've made, like other insurers, with initiatives like upgrading the admin systems, introducing e-apps and e-delivery of policies, which really helps streamline the member experience and helps grow their membership and helps them in their strategies of helping close mortality protection gaps for their members.
And the report also touches on some consolidation. What's happening in that regard, and what's behind it?
Yeah, the topic consolidation within the fraternal industry isn't a new one. AM Best had thought that there'd be more consolidations through the fraternal industry through the years, but there's only been a few on the margin. Some of it is due to the challenges that we've brought up before: expense management, technology spend, even just to support membership growth. It's something that we continue to watch and monitor. We think there could be some more consolidations that happen on the margin, but we don't think it's going to be something that happens where we see robust or a lot of consolidation happen throughout. It's more selective where it makes sense. I think the challenges with consolidation within the fraternal world is the charters, right? You have to have two fraternal companies where the charters align. So maybe where we're seeing some companies change and update their governance and update their charters, this could help facilitate future consolidation.
Ed, Stratos, always a pleasure to see you both. Thank you so much for taking the time to speak with us.
Thank you.
Thank you.
That was AM Best Director Ed Kohlberg and Senior Financial Analyst Stratos Laskarides. For AM Best TV, I'm Lori Chortis.